Private markets have exploded in both investor interest and product availability. So to learn more about this evolving landscape, I'm joined by Matt Magill of KKR. Matt, welcome.
Thank you, Shannon. Great to be here.
So first question for you, would just love a quick overview of KKR and how you ultimately partner with RIAs.
Yeah, we'll take that in two parts. So KKR, we are a global investment firm. We were founded in 1976. And over the last 50 years, we've continued to evolve our business, where we not only manage assets in private equity, we also manage assets in private infrastructure, credit, real estate as well. We have offices across every continent in the globe. And we feel very strongly about being both global and local investors. So we want to have boots on the ground where we operate, but have a global presence and global reach. So KKR is very excited to be, pioneers in the private equity business and to see the evolution, as you mentioned, of private markets in the wealth community has been quite exciting. For us, the goal at KKR is really to fortify our companies and communities that we invest in. And we believe in having a shared success in everything that we do. With that, on the RIA side and private wealth, it's been really exciting to see RIAs be a strategic priority of the firm in addition to private wealth broadly. When you think about the opportunity in the wealth space, the average client has about a 3% allocation to private markets today across global private wealth, and we expect that to increase. For us, RIAs are quite unique in that they are institutions by nature, but ultimately they're managing assets on behalf of underlying families and high net worth individuals. So because they sit between that institutional world and the retail world, it takes a very dedicated and specialized team to work with those clients. So for us, we've built out a dedicated team that's focused on the RIA channel. I'm lucky enough to lead that initiative for us at KKR. We have relationship managers that are based locally to help support RIAs where they are operating. And then we also have a large team in New York that helps to support us from marketing, investor relations, and support. There's 15,000 RIAs across the country. Each one is very unique in how they run their business, from their underlying clientele to the way that they invest to how they run their business. And so it's important for us to have dedicated experts that are familiar with the space to be able to provide the full spectrum of KKR and our resources and infrastructure to those clients. And so it's been an exciting build out of my team over the last few years, but private wealth is certainly an area where we look to be a partner. And I think that's another point I'd make, Shannon, is we want to be holistic partners to RIAs. It's not just about the investment solutions that we provide. We also want to provide thought leadership, macro content. We provide alternatives education, model portfolios. And so how can we be the first call in all aspects of not just the asset classes that we invest in, but also if they have a question related to private markets, hopefully we can be helpful.
So for those investors and advisors that are maybe newer to the space, how can they even begin to access private markets?
Yeah, it's a great question. And there's been a lot of change over the last few years. I think that there's a couple of different ways that they can access private markets. And the way that we work with RIAs is, depending on their business, we provide optionality for them to transact with us how they best see fit. So we certainly work with RIAs in our institutional traditional drawdown funds, the LP GP structure. We also work with clients in custom funds and SMAs. But more and more, we're working with clients in our evergreen our suite of evergreen semi-liquid strategies, which we call our K series, that provide an easier operational access point, low minimums, continuously offered. You don't have to deal with unfunded commitments and the capital calls. And importantly, when we built this K series, we had two key tenets in mind. And when we brought these evergreen solutions to wealth, we wanted to make sure that, one, they were available to a wider array of an RIA's clientele, so making them accredited investor approved or below, so they could scale across their book. And then two, to provide the same access as our institutional clients have had for decades. So you're investing at the same time as our institutional clients, first in the waterfall, pari passu, directly alongside those institutional clients with the same investment team. And so no longer do RIAs or wealth clients have a maybe suboptimal experience with these evergreen strategies. The way that we've built them has been very, very purposeful. And we think it's natural because we've been managing money on behalf of institutions for almost 50 years. And RIAs and individual clients now have the ability to access the KKR platform and how they best see fit. And I would say the last thing I would mention on this topic is there's really three areas that we've seen evolve that has made it easier for RIAs and private wealth clients. One, I talked about the access point, these evergreen semi-liquid structures. We've also have a partnership with Capital Group. So think about public-private strategies where it's maybe a step in to alternatives for those who have not yet participated in the markets, making a wide array of options for access. Two is technology, the rise of third-party platforms that make it easier for clients to subscribe online.
And it's gotten a lot better.
It's gotten better and continues to improve. But digital subscriptions online versus the old school wet signatures has made adoption much easier. And then last, we've done a lot of work around model portfolios. So how does a client go from a 60-40 portfolio into, and then incorporate alternatives? So we've built 3 different models. We tend to see clients accessing alternatives, private markets for one of 3 reasons: generate income, preserving capital, or to increase returns. And so we have 3 specific models depending on an RIA's goals and objectives that they can access through the platform.
And as we've kind of discussed, and as we mentioned, this space continues to evolve and grow. So what opportunities excite you right now when it comes to the private markets?
Yeah, that's a tough one because there's so many interesting things going on, but I would say there's probably 3 key areas that I would hit on. Private equity continues to be an interesting opportunity for us, especially when public markets are volatile. That's when we tend to see private equity outperform and outperform at a greater level than over the last, historical average of about 400 basis points of outperformance to public markets. We're doing a lot in take privates, corporate carve-outs. So think about buying complexity and then being able to sell simplicity. So we think that's a really interesting opportunity given the public market volatility that we've seen. The second area I would highlight is infrastructure. Not an area that many wealth clients have accessed in the past, but with the rise of evergreen structures, it's become more popular. And with our view that there's going to be persistently high inflation, higher rates post-COVID, infrastructure provides a lot of protection in portfolios. So we're very focused on the digitalization of the infrastructure economy, cell towers, fiber cable networks, data centers. We do a lot in the energy transition. So think about anything from transmitting energy to how can we be more efficient in providing energy access to stakeholders. And then third is deconsolidation. Asset-heavy balance sheets that want to maybe transition from a capital-heavy to a capital-light model, and we can come in and own and operate that business. The last I'd mention is asset-based finance. Similar to infrastructure, collateral-based cash flow is really important to help protect against inflation in the current environment. Asset-based finance is where direct lending was, I think, 10 years ago, and is just starting to take off. And as private capital takes more share from banks with consolidation and the public market volatility, we think that's a tremendous private credit opportunity in the coming years.
Well, it certainly seems like KKR is well positioned to help RIAs. Matt, thank you so much for your insights.
Thank you. Thanks for having me.
For wealthmanagement.com, I'm Shannon Rossick.